Have you ever walked into a bank to open a fixed deposit and somehow walked out with an insurance policy? Or maybe you went to update your passbook, but before leaving, someone convinced you to buy a mutual fund or a premium credit card that you never ever wanted. If that sounds familiar, today's financial foul could have already cost you thousands of rupees. Just like football, not every foul happens on the field. Sometimes the foul happens before the ball is even kicked. And in banking, sometimes the foul happens before even you realize what you have signed. I'm Ritu and this is Needu on Stage. Welcome back to Financial Fouls, the series where we pull the red card on bad money practices and help you play smarter with your finances. So today's match, you versus the bank mis-selling, the referee, the Reserve Bank of India. So today we will answer what exactly is mis-selling, what new rules has RBI introduced, what should you do if this happens to you, and how can you protect yourself. Let's kick off today's financial foul. The kickoff. The whistle has blown and today's match begins. Imagine asking your football coach for a bottle of water, but instead someone hands you football boots, a jersey, a gloves, a shin guards, and says, "Congratulations, you bought the complete package." You immediately say, "I never asked for this." Sounds ridiculous, but this is exactly what happened to thousands of bank customers. Some people walked into banks for something simple, opening a savings account, reviewing a fixed deposit, applying for a home loan, but walked out with insurance, investment products, or premium credit cards that they never planned to buy. Some believed it was compulsory, some were not told about the risk, and some simply trusted the bank. After receiving many complaints, RBI stepped in. The final directions were issued in June 2026 and will come into effect from 1st Jan 2027. The goal is simple: no pressure, no misleading sales, no hidden tricks, only informed customer decisions. Yellow card. Here is where the foul happens. Mis-selling simply means selling a financial product unfairly. Let us look at a few examples. You are applying for a home loan. The bank employee says you must buy this insurance policy if you want your loan approved. Or someone tells you this investment gives guaranteed returns, but later you discover it's linked to the market. Or imagine your parents just wanted to renew a fixed deposit, but ended up buying a market-linked investment without understanding the risk. That's not smart selling, that's mis-selling. Selling products is not wrong. Selling them through pressure, misleading information, or without proper understanding. That's the financial foul. And next one is the red card. Now the referee steps in. Here is what RBI has changed. First, banks must get your clear and informed consent before selling financial products. No hidden approvals, no assumptions. Second, banks cannot pressure customers into buying another financial product just to receive a banking service unless specifically permitted. Third, banks must clearly explain the benefits, risk, charges, the lock-in period, and other important terms before you agree. And fourth, banks should not use misleading digital tricks, also known as dark patterns, to influence your decisions. And here is something important. If the bank finds that a product was genuinely missold after investigating the complaint, it must take corrective action according to RBI's direction. Depending on the case, that may include cancelling the product, refunding applicable amounts, or paying compensation. But remember, every complaint does not automatically guarantee a refund. The facts and evidence matters. Next is the VAR review. Think you have been missold. Don't argue with the referee. Use VAR. Step 1. Collect your evidence. SMS, emails, policy documents, application forms, bank statements, anything that supports your complaint. Step 2. Complain to your bank first. Clearly explain what happened and always keep the complaint reference number with you. And step 3. Still not satisfied, or the bank does not resolve your complaint, escalate it through the RBI Integrated Ombudsman Scheme. If your complaint is found valid, the Ombudsman can direct the bank to provide the appropriate relief. Now, it's a game, so winning strategy. 5 quick tips. Never sign blank forms. Never rush because someone says, offer ends today. Always ask, is this compulsory or optional? And read the charges, read the lock-in period, read the cancellation terms. And finally, save every SMS, every email, and every receipt. Because good documentation wins matches. So let's go to the final whistle. Football is fair when the referee enforces the rules. Banking becomes fair when customers know their rights. RBI's new rules are not stopping banks from selling products. They are making sure products are sold honestly, transparently, and only after you understand exactly what you are buying. So the next time someone says, "Sir, just sign here," don't rush. Pause, read, ask questions. Because the smartest financial player is not the one who scores the most goals. It is the one who does not give away easy goals. I'm Neetu Vijay Kumar and this is Neetu on Stage. If you found this video helpful, hit the like button and share it with your family and friends and subscribe for more financial fall related videos. Until that, take care. See you. Bye.